Last week ended on a strong positive note thanks to encouraging economic data from the US. Major indices worldwide recovered the early month losses and major currencies advanced against the greenback as well. So this week, the investors' attention shifts to the Jackson Hole meeting and what the major central bankers have to say regarding the future of their monetary policy. So, welcome to the new week of trading with Swissquote's daily market talk. So the week started on a mixed note in Asia, with Chinese and Japanese stocks under pressure after the US equities recorded their best week since October of last year, and other major indices around the world recorded a strong rebound as well. Now remember, a softer than expected CPI read from the US, combined with robust retail sales from the US and weekly jobless claims data, boosted the expectation that the Federal Reserve could eventually achieve a soft landing. So Goldman Sachs actually cut its recession forecast from 25% to 20%. Then the return of the carry positions in the Japanese yen last week also helped boosting appetite among investors in the riskier pockets of the market. So as such, the S&P 500 rallied almost 4% last week and is up by more than 8% since the dip that we saw at the beginning of this month. The Nasdaq 100 index rallied more than 5% last week, and the index is up by almost 12% since its August dip. The Dow Jones gained almost 3% during the course of last week and 6% since the August dip, and the Russell 2000 index recovered nearly 3% last week as well, and has rebounded by more than 7% since its dip earlier this month. Then elsewhere, the Stoxx 600 index recovered more than 6% since its August dip as well, and the Japanese Nikkei index soared almost 22%, guys. So in summary, it looks like the mini panic of the beginning of this month that was triggered by a soft set of US jobs data, remember, and the unwinding of the carry positions in the Japanese yen has well reversed. The VIX index is back to its pre-mini panic levels right now. So what's next? Well, the market mood changes quite rapidly, as you can see these days, and that's basically because the central banks around the world, they normalize their monetary policies and they proceed at different speeds compared to each other, and therefore every single data point or every single comment from an influential name has this potential to trigger large price action across the markets. On top of this, the valuations, especially in the big technology stocks, are overstretched right now, and investors are obviously wondering if the big technology valuations that got a massive boost from the AI buzz are well justified. Plus, we are in an election year for many countries out there, including the US. There is war going on in Ukraine and also in the Middle East, and we also have these tensions with China. So if we sum up, I would say that investors are doing not so bad this year when we take all these risk factors into account. Now, looking at the market, the US dollar starts this week quite downbeat. We don't have a busy week, or we don't have a busy economic calendar this week, but the central bank policies and the interest rate discussions will be on the many of this week, as the annual Jackson Hole meeting will begin this week on Thursday. So the Fed President Jerome Powell will speak on Friday, and many other central bankers and influential names will also give their precious opinions on where the things are going in terms of monetary policy at this small town of Jackson Hole this week. Now, it's true that Jackson Hole witnessed important monetary policy pivots in the past and is actually a place where important twists and tweaks in terms of monetary policy could happen, but I personally don't see a significant potential for further dovishness regarding the Federal Reserve when Jerome Powell speaks later this week, and that's simply because I really don't believe that there is anything out there at least in economic data that's available to us and to the public, that suggests that the US Federal Reserve should announce a jumbo rate cut at the September's FOMC meeting. I mean, look, many big banks were actually talking about an emergency rate cut from the Federal Reserve last week. But finally, what happened? Well, that expectation just waned very fast. We had 2 good data points, and everyone now is back to the happy good days of pricing a soft landing from the Fed. So, really, Jerome Powell will certainly calm down the game right now, hint that a rate cut is obviously coming in the US, but won't say anything to boost the expectation of a 50 basis point cut. And I'll be more interested as anyone else to get a hint of what will happen after the September rate cut from the Fed, because the latest dot plot from the FOMC was pointing at just 1 interest rate cut from the Fed this year, remember? And well, there is obviously a chance that the September rate cut won't be the Fed's first and its last rate cut this year. Price-wise, the US dollar is softer on this Monday morning. The US dollar index is testing the August support at the time I'm talking here this morning and even clearing it. But the market pricing remains more dovish than what the Federal Reserve is set to deliver at a September monetary policy meeting, with around 30% probability given to a 50 basis point cut, which will certainly not happen, and also more dovish than what the Fed could deliver for the rest of this year. Therefore, I still believe that a rebound of the US dollar is around the corner. As such, the euro dollar, which actually pushes higher above the 110 psychological level, and cable, that is preparing to retest the 130 psychological mark, well, might have a limited upside potential at the current levels. And the Japanese yen, on the other hand, is doing quite better this morning. The dollar yen fell to 146 level after the failure to clear the 150 offers last week. The Bank of Japan Governor, Mr. Ueda, well, he will attend a special session in the Japanese parliament to tell the Japanese politicians why their moves send shockwaves in Japan and through the global financial markets when they decided to normalize their rates. So I believe that Mr. Ueda will keep an accommodative tone, but the net speculative positions turned positive for the Japanese yen for the very first time since March 2021, and big players are increasing their bets that the Bank of Japan will continue hiking its interest rates and normalize its policy despite the sharp market reaction. In the sense, Vanguard, for example, expects a 50 basis point hike by December from the BOJ. So as a result, the 150 level could act as a decent resistance to the dollar yen and eventually keep the Japanese yen upbeat, and that despite a cautious Bank of Japan. Even though I think that the 50 basis points rate hike in Japan will not be possible by December this year. Anyway, elsewhere, the Fed rate cut bet sent gold to a fresh record last week. The yellow metal traded at $2,500 per ounce, while crude oil hardly got a sentiment boost from an improved market mood. The non-escalation of tensions in the Middle East between Israel and Iran and the sluggish Chinese data actually keep the oil in the hands of the bears right now. So US crude is trading near the $76 per barrel level this morning, while Brent crude kicks off the new week below the $80 per barrel psychological mark. So this is all for this Monday. I'm İpek Özkardeşkaya, and thank you for joining me, and thank you for all your beautiful and supportive comments. I hope this episode of Market Talk has been helpful and it has been insightful to you. So please do not hesitate to leave your comments, your reactions, and your questions below as usual. Follow us on Instagram, on X, and on LinkedIn for regular market updates. Subscribe to our YouTube channel for daily market comments, and please don't forget to hit the like button on these videos to let us know that you enjoy them. So I will meet you again tomorrow, and until then, good day trading.